Up next, we're still seeing a bumpy recovery in the job market, but growth in one particular sector actually outpacing others. We'll tell you which one. Well, despite last week's uptick in the U.S. unemployment rate, workers on Wall Street, well, they don't seem too worried. Why, you might ask? Well, many are getting calls from recruiters and headhunters. According to a new Bloomberg poll of the industry's workers, 62% of employees surveyed say they intend to move to a new company this year. Joining us to dig further into the numbers is Paul Sorbera. He's president of Alliance Consulting. That's an executive search firm specializing in the financial services area. Paul, good to have you here on Street Smart.
Thank you.
That sounds like a high number. 62% say they expect to basically jump ship, go to another firm, probably make a lot more money. Does that sound kind of high to you, or what?
Well, 62% is almost impossible, right? That means 62% of Wall Street turns over in a year. They might like to. They might like to find something. But as far as those who would like to, it is a high number.
Is there a lot of posturing going on? I mean, everyone who works at banks is concerned about limits to their salaries or bonuses. And, of course, if you say you're going to go somewhere, it makes your employer think about giving you a raise to stay. Is that kind of the game?
I think that's part of the game, but I think the individuals are also looking for some security. So they are interested in speaking to new firms to try to find maybe a situation that could potentially offer them some greater security. That can come in a base salary. It can come in a first year or some package of an employment agreement, but it also may be a firm that may be a little more stable in their product area or some other elements, which is part of the search process to try to determine, is this a better career move?
Paul, how would you describe the hiring environment down on Wall Street? I think we all try to assess, pre-crisis, we went through the crisis, it was a very different environment, a lot of jobs lost on Wall Street. Where are we? Are we back to, the great deals? And everybody looking to steal, employees from other firms. Are we back there where we were pre-crisis, or no?
Unfortunately not. No. I wish we were.
Well, how would you describe it then? What kind of activity are we seeing?
I think at this snapshot in time, I think it's very tentative. The firms are showing a lot of risk aversion. They're interviewing a lot, and we're very active. And there are a lot of good projects, good searches, senior level as well as junior level. So the full spectrum of projects. Firms that are aggressively looking to build market share, to capitalize on the firms that have gone, the Lehmans, the Bears, et cetera. But there is a good deal of apprehension in expanding. I think that's in part to do what's happening in global markets, what's happening in Europe, the European contagion. I think there's a lot of firms that came in looking to seize U.S. market share, but they've pulled back a bit because of the nature of the markets right now, what's happening with the desks, the profitability of the groups, and they're very tentative in hiring people.
So, I mean, from the story, it seems like we're back to the days of flip-flopping on Wall Street, leaving every 2 years to get a bigger bonus. 75% of guys in the survey, or women in the survey, received at least some interest, so they're getting calls from headhunters. But you're saying that you think people are more risk-averse and looking maybe for really a more secure position, a better fit, a longer-term job, a better base salary as opposed to a big bonus to sort of take sort of the long view in their careers. It sounds like even if it's not great for business at your firm, that sounds good for the long view for the U.S. and for Wall Street.
I think there's positive elements to it. I think people are thinking a little more prospectively about their careers. Where is this taking me 2 and 4 years down the road? It's not just a short-term move for them right now. So I think that's good.
What about the worry? And I think there are, employees in the financial service area that were saying that they were going to end up working for foreign firms. Has that actually played out?
Yeah, that was a big trend last year, beginning of last year. But
it's over?
I kind of returned back to, the European contagion, some of the problems last year with hiring people in and the groups not performing as well as they may have liked in the first year. So you're starting to see some turnover already in those groups. It's always one thing to come in and have plans. It's another thing to implement it successfully.
Yeah, and it seems like what you're saying is a lot of people, they're getting calls, they're going for interviews, but they're not really locking down the new job.
Yes, there's a high level of interviewing versus what I would call adequate offers going out.
What about, there was a trend also, or we're hearing of a developing trend that people were leaving big Wall Street firms and going to smaller boutiques. moving from the big behemoths to maybe regional banks, maybe opening their own shops, hedge funds.
Yes.
Do you see that going on still?
It still is going on. I think the boutique fad was high volume. It was particularly high volume when there was large layoffs, and it was very easy for people to make that break. Now it's more difficult. If you're leaving a bank, you may have a lot of stock compensation.
Not so easy.
Exactly. The invested stock is becoming a big battle right now.
We got to leave it there. Paul, thank you so much. We really appreciate some time with you this afternoon. Thanks.